So, Stephen, it looks like things were a little bit better than expected. Break down the numbers for us.
Yeah, they were better than expected because we even heard from the chairman, Robin Li, earlier saying, it's going to be a chilly time in 2019 for Chinese companies. And I guess he was alluding to the fact, of course, of the trade war. And that could affect as well the slowing Chinese economy. And then that would have a knockdown effect, of course, on advertising. Baidu relies heavily, or more so than its bigger rivals like Tencent and Alibaba, on advertising. So that's what we were really looking at, is advertising spending and also the top line growth. So fourth quarter adjusted profit beat estimates, $1.92 per ADR. We were expecting $1.74. Also, a fourth quarter revenue beat even the highest of the estimates. The consensus was $3.89 billion. It came in at $3.96. Basically, new content and products have been energizing the ad business better than even probably Robin Li had expected.
So going beyond Baidu, I mean, how has the broader Chinese online advertising industry held itself up against the macroeconomic concerns, the trade tensions?
Yeah, so what they were trying to do is, of course, bolster their advertising business, but at the same time, they need to build out their news services that can complement that and become less reliant on advertising. They want to kind of take the WeChat model from Tencent and build what's called a super app, an app that can provide so many different services. So you mentioned some of those other services. It includes AI-driven content throughout that platform. They're also separately building another division, the Apollo autonomous driving. They have their news feed. And another big one, too, that they are seeing some traction on is their Netflix-like video service, iQIYI. So, it's going to be a work in progress through this year with tough economic conditions and headwinds on global trade on the advertising space. But Baidu, given these numbers, I'm sure Robin Li is fairly pleased that that gives them a little bit of momentum going into what he already said is going to be a chilly year in 2019.
Right, and in addition to those macro factors, there's also a crop of new startups, notably ByteDance, which is valued at billions and billions of dollars. It's actually the most valuable startup in the world right now. I mean, are we seeing those companies impact Baidu's advertising revenue?
Yeah, absolutely we are, because as the economy is slowing, advertising rates are coming down, and upstarts like ByteDance are siphoning off some of that ad spend. And keep in mind as well, Alibaba has done much better of late in the advertising space. They had been more on the laggard side on advertising as they focused more on e-commerce, but their advertising business has also picked up. So sure, Baidu has to pick up its game on advertising, and that's why they are trying to mix in all these other services, and that's what brought down operating profit, I might add, in the fourth quarter. It was about half what it was a year ago, simply because they are spending so much on other services and new content.
Right, you're talking about that drag on margins as they're spending on those newer services, but how are investors stomaching that?
Yeah, well, of the triumvirate, the Bat triumvirate, Baidu, Alibaba, and Tencent. Tencent has rallied from its trough. Alibaba has withstood, of course, the global trade headwinds traded in New York. Baidu has been a bit of a laggard. However, we're seeing the stock already popping up a bit. They are pleased that these numbers beat expectations.